Hi everyone, hope you're all doing well. Today I have 6 big stock updates for you guys. So for you guys that like me doing videos and talk about multiple stocks in the video and spending a minute or two on each company, this video is for you guys. I'm going to talk about stocks that I own, stocks that I don't own, and stocks that I used to own as well. So I hope you enjoy the video. Let's get started. So first of all, I just want to say thank you for the comments in yesterday's video. There were some really nice comments in that comment section. But first of all, let's start with the stock that I own that reported earnings today. Celsius, what a move this is having today, up 17%. It's been a cracking week with Hims absolutely smashing it and now seeing Celsius smashing it. Just popped up 18% in one day. Absolutely insane. It's been a fantastic week, hasn't it? So good to see the stock that I own, Celsius, having a fantastic day. And another nice one to add to that long list of winners. If you actually look, when I first started talking about Celsius now, the stock is now actually up 450% since I first talked about Celsius around about 2 years ago, which is absolutely crazy. So yeah, if any of you guys are still holding on a big average from there, looks absolutely amazing. And I guess that's the big thing with stocks and being bullish on stocks, and why it pays to be a bull on stocks, is that the most you can lose on a stock is 100%. If it goes really wrong, and the most you lose is 100%. If you're bullish on a stock and you have a winner, it doesn't only just go up 100%, it goes up 200%. It's unlimited, 200%, 300%, 400%. And the amazing thing is, if you are able to hit one of those winners, that winner can easily make up for in 2 busts, 3 busts, 4 busts. It's absolutely insane what a big winner can do for your portfolio and the returns it does. So yeah, really good numbers from Celsius today and a good return on the share price. If you have a look at the earnings they've just brought out, absolutely insane. Fourth quarter revenue up 95%. There was actually a little bit of a leak that the revenue number got leaked a little bit early before earnings. I don't know if any of you guys actually saw that. Revenue, really good growth. North America strong. International coming on strong now. Gross margins growing up. Net income up 239%. EBITDA up 387%. Diluted EPS up 242%. Absolutely insane. And the crazy thing now is that I reckon Celsius could go on a little bit more of a run. I mean, the valuation isn't actually too bad. Like on a forward basis, I think it's somewhere, it was 50. After today's jump, it's probably a little bit higher saying that. But with Celsius now, it's a company that's growing crazy rates, growing profitability at crazy rates. And what that actually enables it to do is actually join now the S&P 500. And if you actually look at any stocks like Uber, for example, and the run that it had since it joined the S&P, or it was going to get included in the S&P 500, it seems to make quite a big difference because all of those funds that need to buy it. So yeah, Celsius now looks like it's going to be on its rally for an S&P 500 inclusion in the next coming few years. So we'll see when that happens anyway. So yeah, keep an eye on that one. The next one is Beyond Meat. I don't know if you saw this the other day. I was going to make a video on it, but I've obviously been making other videos this week. But this is the time to stick it on here. Beyond Meat, absolutely crazy jump in Beyond Meat. Starting to give a few of it back a little bit today in the last few days, but actually saying that it's having a bit more of a jump today. Bit of a short squeeze going on here. This is what I believe it is. Everyone was kind of looking for a reason why it jumped so much because it reported earnings, and the earnings were horrible, and I think the reason why it's going up so much is because it got a big short squeeze. If you do look at the short percentage of float, 37%, that must be the most shorted stock on the stock market. And yeah, if you look at the numbers they brought out, I mean, they were horrendous. That's why it makes no sense it jumped off earnings, because the numbers were horrendous. It's a stock that I used to own, and I sold out a while ago, and I'm glad I did. EPS was negative $2.40 compared to the consensus of $0.89. Now, they did take a bit of a charge in there. Net loss was 95 million. Revenue was down 7.8% year over year. I think a few people got excited on the outlook. So if you look here, gross margins is expected to be in the mid to high teen range for full year 2024, which is a big improvement on what they've recently been doing, because if you look at the recent quarter, the gross margins was a negative 113%, and these are charging there, to be fair. So, but even without the charge, it was still negative gross margins, and a year ago it was negative 3.7%. So maybe a few people got a bit bullish on the outlook and going, oh look, the gross margins are absolutely improving. But when you look at Beyond Meat's management, and this is why it comes down to management are a key thing that can make or break your investment, and that's what Beyond Meat, they talked a good game, but when it comes to the delivery side of it, they never delivered. If you go back to a year ago, their outlook for 2023 was gross margins is expected to be in the low double-digit range, and then you look at what gross margins they've actually just closed off this year, and we showed you the gross margins was negative 113%, and the year before negative 3.7%. So yeah, everyone's getting it hyped about maybe Beyond Meat and offering good gross margins. It's like, guys, come on. They did literally the same thing a year ago, and they lied to us, and they didn't deliver. So why would you believe management team now? I can't believe that anyone's kind of falling for that. And one way they're going to actually increase the gross margins is by hiking up the prices. Like, who's going to be buying the product at higher prices? They're struggling for people to buy it now. Who's going to buy it if they hike up the prices? I thought that was absolutely crazy. So, yeah, just watching that one from the sidelines, but I thought that was an absolute crazy move from the stock market there. Snowflake is down 20% today. I don't own Snowflake. It's not really a stock that's kind of interested me, but I know a lot of people are big fans of it, and I believe the share price has done quite well recently. I take that back. If you look at Snowflake's numbers, they weren't actually too bad. EPS was a decent beat, revenue was a beat, but shares are down massively. A lot of the reasons why I didn't look at the guidance, by the way, so there could be something in the guidance. But what the more likely is the CEO said they're actually going to leave. I was quite surprised because I thought with a move like this, I was like, oh, this could upset them. And then I found out that Snowflake's CEO has actually only been in the business since 2019, which I was like, that's quite a big move. Like, for the stock to go down 20% on a CEO that's not really like being, the glue in the business, it's relatively a short-term period for a CEO. Is that I was quite surprised, but I think ultimately it comes down to the valuation. Like, I've never been a fan of Snowflake because I just look at the profitability and it just puts me off. They lose a lot of money and it's not really improving. And a lot of people will stare at this and go, oh, but look at the free cash flow. And even when I look at the free cash flow, let's say they do $1 billion in free cash flow in a year's time. So I'm even going a year ahead here. I mean, that's going to be trading like 77 times free cash flow. I just think I don't like it from the profitability point of view, but even the people that start shouting out like free cash flow, it's still like 77 times free cash flow, which I just think is absolutely insane anyway. Direct Line. So Direct Line had a fantastic day the other day. The stock, as you can see here, was up a good amount, and the reason why is that someone came in and offered them a bid. They offered a 3.1 billion takeover bid, which, if Google is correct, which sometimes Google is not correct, is still a bit of a premium on where the share price is now. You can see here it's still a 2.7 billion market cap, so it's still a good 10% above where the share price jumped to be fair. They offered a buyout. Direct Line rejected it, and I was quite surprised, really. You look at the share price, and it's been a tough time for many shareholders here, unless you bought in the last kind of 12 months. Neil on Discord, I'm looking at you there. Then obviously you're doing really well. But apart from that, if anyone's been holding this for long term, obviously it's not been doing very well, and maybe that's why they reject it. Because the thing is that a lot of people, if they were to take this offer, would probably take a loss on it. So that's probably why a lot of people are rejecting it. But I thought it was a pretty decent offer. What I wanted to say is that it's just once again quite clear that we're seeing a lot of buyouts and offers for a lot of UK businesses right now, and I guess the suggestion is that the UK businesses haven't really rallied as much as like the US stocks in the last 12 months. So a lot of US firms and other areas of the world are looking to the UK and going, hey, we can buy a decent company at cheap valuations here. I got to say with Direct Line, I don't know how much I would call it a decent company. I mean, they do throw decent amounts of profitability off, but there isn't really much growth there. From a balance sheet point of view as well, it's actually not too bad, to be fair to it, looking at it now. I guess the big thing is the dividend. I guess when you do look at the dividend they are able to throw off, that's probably the most attractive part of it. So, just wanted to put that in there, just saying, it's another example that a lot of international markets are currently looking at the UK as very cheap businesses as takeover targets, and we had another offer there. I think we'll see in the next kind of 12 months, especially if interest rates go lower. I think a lot of international markets will actually come in for a few of these UK stocks at the moment. Halfords had a horrible day the other day. It came out with a profit warning. Stock fell down 30%, and it's actually put a bit of a recovery in. So I didn't know if anyone fancied that. Obviously, if you bought it at the moment, you're probably sitting up a little bit at the moment. If you did buy it before then, you're probably down on it. So it's had a fair bit of a drop off at the moment, says Halfords. I think it's another example of the tightening spend in the UK at the moment. They said that they blamed wet weather. I love that one. I love it when they put that one in there. And customers buying bicycles on credit, they say they don't make as much money on the credit side of it. I guess it's just the tyre spending, isn't it? People are kind of going, oh, you know what? I'm going to see if I can make those tyres last a bit longer. Oh, you know, I need a new bike, but maybe I can get another year until I go buy that bike. Or if I'm going to buy a bike, it's going to be on credit. So I guess it's just an example of the tightening environment that we're kind of going on here in the UK. But yeah, obviously a big drop. I don't know if you guys want to see a video on Halfords. Personally for me, I've actually not looked into the business that much yet, so I don't really have an opinion on it to give you guys if I think it's one to avoid or one to buy. But I just thought I'd put it in there and see if any of you guys have bought the dip in that one. And the last one I want to talk about, the 6 stocks today, is Google. Google's having a bit of a wobble at the moment, isn't it? Last couple of days, the stock has definitely been dropping a fair amount. And I think a lot of it is to do with its AI product at the moment, which seems to be obviously the most talked about thing. You can't be getting your AI wrong in this environment. I was listening to Callaway Golf's earnings the other day, and I was listening to them actually talk about they are developing AI clubs now. I was like, wow, we're even getting AI into golf clubs now, and even Callaway Golf are mentioning them, which is absolutely crazy. But yeah, the stock's down a little bit at the moment, having a bit of a drop. And I thought I'd mention my current thoughts on Google as the last stock on this video. So yeah, Google, I bought quite heavy during 2022 when it was having this dip. I wanted to make Google my largest position. Unfortunately, it didn't stay below the $100 range for that long, which was my target to buy, and it's rallied up. So I was up a lot more, and now because of the recent drop, I'm up about 30%, which isn't too bad. But with the drop at the moment, am I considering maybe buying into Google or buying more shares of Google? Well, ultimately, there's two answers here really. If I didn't own shares in Google, would I be buying now? I've got to say probably. If I didn't have a position, I'd probably be a buyer. But I do have a position, so I feel like I don't need to rush into it. I can be patient. And there's sometimes where you think it can't go much lower, and it does continue to go lower, and that's what I'm kind of hoping for. I am kind of hoping for it to go a little bit lower. Realistically, I mean, it's still trading at like 25 times earnings, and when you look at Google, I mean, the lowest it got to is 19 times earnings in 2022, which obviously, you know, when you go back to there, you know, how much fear was there then? There was a lot of fear out there. So I don't think we will see Google probably drop below 19 times earnings. So that's kind of my base of like, I don't think it will go much lower than that. Like I said, you never know in the stock market, but that's what my kind of thinking is. However, it does kind of have those drop down to like, you know, 21 times earnings, 23 times earnings. So realistically, I look at this and I go, I don't think it'll go much lower than like 19 times earnings, but if I can get it a bit closer to that kind of market average of 20, 21, 22, that's personally where I'd like to buy. So I'm kind of looking at Google and going, I don't really need to buy myself yet because I've already got a position. If I didn't have a position, I'd probably buy 50% now and then see if I get a 20% drop and then buy another 50%. Then that's what I'd probably do if I didn't have shares in Google. But I do, so I've kind of already got my 50% here, so I can kind of wait for the drop. I mean, already being my 5th largest position is pretty decent, I think. So I don't really need to rush into it. I like it as my fifth biggest position. I would love to have Google as my largest position. I'd be absolutely fine with that. But I think it would just have to be the right valuation, and I think I can afford to be patient with it. So I think realistically, I'd like to see Google maybe drop to like the $120 range, which I guess is, you know, another 10% drop here. I don't know if it will happen, but I'm willing to play the waiting game and be a bit patient with Google. But it's definitely interesting on the drop that it's on at the moment, and I don't know if it'll get there, but I think that's my kind of plan of action. And if it does get there, I will buy there. But if I didn't own shares, I think I would be a buyer, to be honest with you, and I'd just be putting my first buy here in, and then see if it does drop lower, and then go keep adding a little bit more, I guess, really. So yeah, that's my thoughts on Google. Fantastic business as well, you know, fantastic business. You know, when you look at the moat they have and the profit they throw off, the revenue they have off, seems to be like it's one of those stocks that just the market doesn't really like at the moment. And when that does happen, you know, it's good to take advantage of it, isn't it? So yeah. Anyway, that's the video for today, guys. I won't keep it any longer. Hope you enjoyed it. See you in a bit.